Roth conversion is simply when you move assets from a traditional or rollover IRA into a Roth IRA. In doing so, you are responsible for ordinary income tax in the amount that you moved assets over. For example, if you move $100,000 over in a given year, you are responsible for ordinary income tax on that $100,000 for that tax year. The reason you want to do a Roth conversion is so those assets now grow tax-free for the lifetime they were in that Roth account, including when those assets pass to your legacy, which is the main reason you want to run Roth conversion calculations and speak with your certified financial planner about if it makes sense to do a Roth conversion. An active Roth conversion strategy deals more with the markets and less about the amount you are converting. Specifically, you're waiting for a correction in the stock market, the global equity markets, small cap, mid cap, whatever area you're looking to capitalize on in terms of those assets. You're waiting for a pullback in the market, and those are the assets you want to convert in that calendar year. Most certified financial planners would tell you that almost all clients in some degree can benefit from a Roth conversion strategy. With recent legislation, the SECURE Act passing and going into implementation in 2020, it has created even more of an opportunity to have a conversation with your certified financial planner to see whether or not a Roth conversion makes sense to you, and most likely in some capacity it does. So how do I implement an active Roth conversion strategy is where we are actually talking more about the market than we were about the assets we're going to move. Let's take, for example, someone who retires at 62 with $1 million in his 401k, his or her 401k. They've decided to roll that into an IRA. They have 10 years now with the new legislation that came out with the SECURE Act that went into effect in 2020, which now your RMD, which is your required minimum distribution, can be pushed instead of 70.5 to 72. So in this example, this client has $1 million in their rollover IRA. And by running through cash flow analysis with their CFP and their tax planner, they've identified that it makes sense for them to move approximately $100,000 a year for the next 10 years. Let's say that client retired in 2015. In 2015, the markets did pull back in the summer of 2015, so that was a great opportunity to Roth convert then. If you would have moved those shares in the summer of 2015 versus in the beginning of 2015, you can move more shares over, individual positions over, and have gotten a rebound at the back end of 2015. Going back to my example of $1 million client and wanting to convert $100,000 a year, in 2016, the markets pulled back very quickly. There was a correction in January and February of 2016. And if you didn't know you were going to convert $100,000 that year, you might have missed your opportunity to do so with an active strategy. If you knew going into the year, which is what I'm speaking about in that active planning and active Roth conversion mentality, you would have been able to take advantage of that correction in early 2016 and convert that $100,000 in January or February and got the opportunity for your rebound throughout the rest of 2016. That rebound even continued through 2017, and there was no correction in the markets that really made an advantageous active Roth conversion strategy be able to be implemented. So simply that year, you would just do what any normal certified financial planner or tax planner would do, and you would convert sometime near the end of the year or in the beginning of the year if it made more sense for you in terms of what your cash flow needs would be when you're looking at your taxes. In 2018, that same person could have converted twice in that year, both at the beginning of 2018 or at the end. So again, knowing that they were going to convert $100,000 in that calendar year of 2019, they could have done that active strategy in the beginning or the end and still taken advantage of that market correction. In 2020, of course, with the global pandemic, we had a very drastic drop in the global equity markets. down as much as 35%, depending which market you were looking at. And if you were able to even take advantage of 20% down or 25% down, maybe you got lucky and got the full 35% in terms of market bottoms. We're not talking about market timing. We're really talking about taking advantage of a market pullback and using an active planning strategy, which will then create a lot of after-tax performance. So again, in 2020, that $100,000 should have been converted in February or March, depending on when you were able to get to it. It's also important to note going forward, you can continue that strategy looking for opportunities. If we get another drastic pullback later this year, you might decide to convert more this year, knowing that yes, your tax burden will be higher, but if we get another drastic pullback because of the global pandemic, it will create an opportunity in your plan to create long-term wealth. And that's the key. What we're trying to do with an active Roth conversion strategy is create not just a market timing event where we're converting now to get that 20%. We're moving those assets over a multitude of years very tax efficiently and glide pathing out what we want our taxes to look like, so that in 10, 20, 30 years even, that account, that Roth account that we moved $1 million in that 10 years is now growing tax-free. And in terms of legacy planning, if that is passed on to a non-spouse, those non-spouse are inheriting an account that they have to take out now within 10 years. There is no longer the stretch IRA, which is what it used to be known as. If a non-spouse inherits a Roth account, they still have to take the assets out within 10 years, but remember, that's tax-free money. So depending on when they take it out, they're never going to be paying taxes on it. And that's why an active financial plan and an active Roth conversion strategy makes sense to grow your wealth tax-free in that asset class. For more information about how to implement an active Roth conversion strategy or any of the financial planning strategies we implement with our clients at Osborne Partners, please reach out and we'd be happy to schedule a meeting, a complimentary meeting with one of our certified financial planners. Thank you.